Hey traders, this is Blake Morrow with Traders Summit, and with me today is Beat Nussbaumer. Good to see you again from MacroBeat, by the way. Good to see you again.
Hi, good to see you, Blake. Thanks very much for having me again.
I'm glad to have you because, last time we met, you were pretty bullish on the dollar. A lot of things have evolved. The dollar has obviously broken higher. We've seen the euro slump to new lows for the year. And so great call, first of all. Second of all, let's talk about this week. I mean, we've got non-farm payroll coming up. People that are viewing this particular video are going to be seeing it ahead of non-farm. What are your thoughts here with the dollar, where we're at, and with all the volatility that we're starting to get at the beginning of this trading season? What are you seeing?
Yeah, thanks very much, Blake. To be honest, I think this sort of dollar trade just gets a little bit of traction now, finally. I think it took the bears a long time to now finally maybe start to admit that the Fed is actually finally moving. There are people out there that thought like the Fed is never going to move, but they will. And I think it's pretty much set in stone. This sort of brings me to non-farm, which I think this non-farm this time is going to be the easiest one of all times. Of recent times.
Yeah.
It's really about the market has digested the last accident of last month, the 235K, very well. Market started to realize there is some volatility around the data given COVID or whatever else. But I think the market understands the trend. So I think, we expect something like 500K, get a bit of a better ADP today. We know ADP and NFP don't mix that well all the time. But I think, to be honest, the trends that we see this week, or that sort of started last week or the back end of last quarter, are just going to continue, I feel. I think the only difference on non-farm is the pace. If you get a real strong one, I still wait for that one occasion where it actually prints above 1 million. Maybe I never get it, I don't know.
Yeah, you never know.
So one of these sort of shocks where really everyone gets it. If you get a benign number, maybe the dollar dips a little bit on the day, but I think any dollar dip right now is an opportunity to buy. I'm getting the feeling that the dollar bears from this year starts to slowly capitulate because it's really hard to see what can change in the near term. The ECB is clearly definitely one step behind the Fed right now, maybe two, we don't know yet. We hear about that in December. But that's really it, to be honest. I think usually I have like a plan for different levels of non-farm. What I do this time, I don't really bother. I'm long dollars. The only thing I've done that I changed since we last spoke, I've given away my dollar Swiss and my dollar yen. This is more to do with the sort of hiccup in equities, the debt ceiling story, China Evergrande story, bottleneck, energy crisis in Europe. So the market just starts to get a bit nervous because it feels the system is stretched, the world is stretched, and just a bit uncomfortable. So I did find that dollar yen and dollar Swiss has become very tricky because it's easier to be short Aussie dollar, you like long dollar and short risk, and euro dollar you can be short anyway because it's dollar. And so I just restructured my risk a little bit from having long all the dollars to more selective dollars, and I continue to do that into year end. As I think this whole equity picture I don't like at all. There are moments where we may have like more pressure from all what's going on in Asia and China. So I just want to be a bit clear of that one, to be honest, right now.
That's very good. It's interesting that you say that. So not all dollars are created equal. And if we continue to see a slide in the equity markets, what you're saying is that we might see some continued yen strength and maybe some Swiss franc strength as a result, as a risk off proxy, if you will.
Correct. To be honest, if we look at Euro Swiss has dropped about 2 or 3% again in the last sort of few weeks. That probably shows you the true nature, the true underperformance of dollar Swiss right now. Euro yen got hit like in the last few days. It hasn't sort of broken any lows from recent times, but it's quite it's like 1-2% off the highs again. So it just shows how much dollar yen and dollar Swiss have underperformed in the last few days. And this is predominantly due to the change in equities. So suddenly we have a sort of sell the rally type of market. Today again, quick rally on the cash open. As soon as it's open, boom, the sellers just step right back in. So I think, I'm not saying the stock's going to collapse, but I just think there's quite some risk attached because we just have too many worrying stories, to be honest. We could as far as geopolitics, not that I think China's going to invade Taiwan tomorrow, but it's just another sort of headache that's out there right now.
And I guess seasonally speaking, it's probably all working by the playbook, and maybe we do see a September, October, little slide in risk, and that sets us up for a great holiday season, right? Where we can just get short dollars and buy stocks, right?
Yeah, to be honest, I'm not yet sort of convinced about the Santa Claus rally, but we see it.
All right.
Yeah.
Well, Beat, I want to say, great call on the dollar. We're really looking forward to this non-farm payroll on Friday. And I think the dollar, as you pointed out, continues to strengthen here, and we'll be looking to buy dips on the dip. So how do people get to learn more about you?
To be honest, I think you just hit me up on macrobeat.co.uk. I have a little button there that would also launch a free trial that I do for my chat rooms that I'm running. They are sort of really hands-on, live, 12 hours a day, different channels, news, charts. I share my live trading. This is really for people that are very serious about learning about trading. This is not a signal service. It's not like a get rich quick kind of thing. This is what an institutional trader is doing, how he's managing his risk, how he sort of puts the story into actual risk, and so on and so forth. So you learn the true nitty-gritty of trading. And this is probably interesting for everyone who considers to go full-time trading one day, because you have to lift the retail traders out of retail and into give him the sort of goggles from an institutional trader.
I agree. Well, Beat, thank you so much for your recent contribution, with the Trader Summit community. We look forward to hearing from you and reading more of your content, which if you guys want to find out more about what Beat does, click on the link below to get directly to him and see what other posts he's been putting out. So Beat, good luck this week, and thanks for your comment.
Thanks very much indeed. Bye-bye, Blake.
Have a great one.